Bummed by your recent crypto losses? Let's see if we can add a silver lining to that. First and foremost, you can actually take those losses and create a tax deduction for the misery that you're going through right now. So if you have crypto losses, make sure you are capitalizing on those losses by selling some crypto, selling at a loss, because you don't get that tax deduction until it becomes a loss that is realized, aka you sold it and bought something else. Well, the perk with the crypto markets is in the stock market and other similar markets, there's what's called a wash sale rule. So in crypto right now, the wash sale rule does not apply. So a wash sale rule basically says you cannot sell something and buy a asset that is the exact same or similar for about 31 days. So for example, I couldn't sell Facebook, capture a loss, and then go buy Facebook, or I guess Meta these days. I couldn't go buy Meta back, 2 days later to write it back up. Can't do that. However, in crypto you can. So you can sell Bitcoin one day and buy it back the next day, and the wash sale rule doesn't apply. Though, quick hedge here, Congress did, position that to go into effect, or they tried to enact it last year. It didn't pass. So there is a possibility that they could implement it, and it could be retroactive. So obviously use with caution. But that being said, for right now, no wash sales exist. So you could sell your Bitcoin, capture a loss, go rebuy Bitcoin, and now you have a new coin that start over. You could buy Bitcoin or sell Bitcoin, buy Ethereum, or vice versa. So those type of losses, you capture that loss on paper, you can write it off against your taxes, especially if you have other capital gains. So if you have gains from crypto or other investments, capital gains, short-term gains can offset short-term losses. Long-term gains can be offset by long-term losses. You can also, if you don't have any gains, you can take up to $3,000 off as a deduction, whether you have gains or not each year. And those losses will carry through from year to year until all those losses have been offset. This is actually a strategy that we employ when I work with clients, is similar to wash sale rules, but it's also called tax loss harvesting. So even if you plan on holding Bitcoin forever, you're a hodler, well, you can still sell it and then rebuy it back. Or, in the stock market, we have to basically, sell something, buy something similar. So for example, we could buy, sell something that's an S&P 500 ETF, and then we could buy back a Russell 2000 ETF. They're different enough where, you can still you avoid those wash sale rules, but they're alike enough where the correlations are, 98%. So, they're basically going to move the exact same way, even though you're capturing that loss on paper for tax purposes. So in the crypto market, crypto sphere, you could basically, sell Bitcoin, buy it back, avoid those wash sale rules for now, or say it's a situation where you could, I'm trying to think of two that are highly correlated, but say Solana and Cardano are, I guess, correlated enough. I haven't looked at, but say you own Solana right now and you could sell it for Cardano and make that switch. That's just one example that coming off the top of my head. But long story short, if you have those situations, capturing those losses on paper is a super valuable tax strategy. And that's just more money that you're not paying in taxes that you can then go buy more crypto with or go buy more investments with. So all that being said, I know there's a lot of losses in the crypto markets right now, but it's not all doom and gloom. You can reap some benefits by using this opportunity to take some tax losses. If you're in coins that you don't think are going to recover, that might be a good time to reconsider what you're invested in and taking that loss on paper. Again, at least you get the benefit of the tax deductions. If you go to zero, a lot of times, especially in the cryptos, if it's due to rug pull or scam or anything like that, you cannot deduct those. So selling at a loss is going to be better than not getting any deduction whatsoever. So if you think you're going to be in a situation where you're going to have a rug pull or basically the company's going to go defunct, get your money out of that crypto sooner than later, because you can always reinvest it in a different way and you've captured that loss. But make sure you're in it for the long haul. You're not just holding a cryptocurrency token just because you're afraid of capturing those losses. Because realizing a loss is not the worst thing in the world. You do get a tax benefit out of it. Losing it all and not getting a tax deduction, well, that sucks. So make sure you're at least getting some silver lining and realigning your portfolio for the long term. Hopefully you found this valuable. Until next time, cheers.